All right, good Thursday morning, everybody. It is February the 22nd. We're about 11:07 here in the Central Time Zone, so market's been open for almost 3 hours now. Just wanted to take a look here and give you an update, see what's going on this morning. Starting here with the S&P 500, of course. I wanted to go ahead and give you all a heads up again. I mean, I'm just kind of actually reiterating that we are in our sell zone right now, so I have been unloading some long positions, and like I mentioned the other day, this area right here, the 618 retracement from this decline is what we expected to happen. So we're kind of watching this. We were able to briefly peek above it on this day and actually closed above the 50-day, but we were not able to remain above this 618. So that was kind of a signal. Yesterday we tested above it and then reversed course in dramatic fashion and reversed lower and actually ended up closing down into the lows of the day below the 50-day moving average and pretty much right on top of the next support lines that we have set up here. We had mentioned a little while back this 50% retracement. It had coincided with a swing from over here, and I can put that back on the charts for you a little bit later. But it was a confluence of some Fibonacci levels here. So now we have 1, 2, and 3 zones coming into play here. And like I say, I'll just go ahead and add that on there real quick for you. I do think that the market is, like I say, the trend is to the downside, and the bias rather is to the downside. We could reverse course and start heading back higher, but the probability or the likelihood of that just seems fairly small and trivial. So, you just kind of got to take the data you're given and work with it when you're doing this technical analysis stuff. So, as you can see here, and I'll make that a little bit easier to see for you. How about bright yellow or orange? There we go. Okay, so as we can see here, and this is what I was just talking about a minute ago, there was actually quite a few zones coming into play here. This was a retracement from that previous swing right here, this orange line going across through here. Now you have the 50% retracement as well as this 236 retracement from this swing to the upside that we have seen. So now we've got several things coming into play, and not to mention we also have our 618 and our 50-day sitting right above us too. So we've got a lot of resistance overhead. I mean, we're pretty much in that zone right now that, like I said, we need to be selling out of it. So if you kind of take a look a little bit closer term, a little bit shorter term rather, you see that after yesterday's sell-off, we actually got a bounce higher this morning. This red bar right here represents the final closing price yesterday. So this morning, this little green bar right in here is where we actually opened at. And so we opened a little bit higher and spiked up and pulled back, and now we've continued to rally throughout the day. So even though that's the case, and I'll pull it up here on SPY because I think that shows a little bit better and I already have the lines drawn for you. So if we're looking at this intraday swing here yesterday from the high that we put in to the low closing price that we ended up settling at, the 618 retracement is about 273 on SPY, which if we kind of were to move that over to SPX, it would be about 2730 roughly. It's about a factor of 10. So we're pretty much right in that zone right now, like I said. So I actually just added to my short position, and so I think that that we actually continue to trend lower, and I don't see much reason for buyers to continue piling into this market at the current time. Now we're starting to have a series of lower highs being played in place with lower lows. We had our moving average cross. We took out our swing low there, so it tried to flip back to the upside here, and we actually got a signal because this high took out this other high. But like I say, the bigger picture bias is to the downside, so sometimes you got to take some of these signals with a grain of salt. Now you trade what you see, but you also got to keep in mind, if the hourly chart is pointing to the upside, but the daily chart is pointing down, then the bias is to the downside. You're kind of fighting an uphill current there. So if we take a look at like our 120-minute chart, we kind of can see it smooths it out a little bit there. So we kind of see that after we fell and we took out this high which we'd been watching, now it's kind of acting like a support zone through here at this 2710 area. So that's kind of going to be a level that we need to kind of keep an eye on. But like I say, I think that we've actually put our high in now for the day, and that we're actually probably about to head to the downside for the rest of the afternoon. Of course, now I could be wrong on that, so we'll have to wait and see. But like I said here, now on the 5-minute chart, we're still in a buy mode right now. And another thing I should point out here is that the volume is pretty pitiful down here. that you can see pretty much the higher the market goes, the lower the volume gets. So from the buyer perspective, and that's kind of one of those things that we're just running out of people to buy up here because pretty much people are positioned for a downward move. So why are they going to buy up here when they've already bought down here? So that's kind of a way to think about this. And there's some other names I want to kind of get to you real quick, just to kind of go ahead and give you an update on what's going on. I'm seeing several things that we've been playing. The first one I want to hit on is Pandora. It actually worked against us, so that's one that looks like we're going to have to just go ahead and cut our losses on that one. Actually, we traded in and out of it several times before, so we've made our money. But we were expecting a little bit more upside than what we ended up getting. Actually, I was looking at it the after hours yesterday. Shares popped from 486 or something like that, where they closed at 488, and they went as high as almost 550 or 540. 542, I think, was the high in the after hours. So this morning they pretty much opened, and you can even see when you look at this morning's chart. Whoops, we'll go to a 5-day here. You can see that they just pretty much opened and tanked, and I'll put the after hours on there for you, just so you can kind of see how it happened yesterday. But you see here in this gray bar or gray area here is the after hours. You can see when the earnings report came out here, it jumped to the upside, hitting 540 something. We sold off a little bit whenever the management's earnings call got started. We came back, and then this morning it just tanked. So I guess as people have read that report, they don't like it as much as what they initially did. So like I say, this is one we'll probably just cut our losses now. It's starting to give us a little bit of a reversal here, but we're positioned so far out of the money at this point in such a short dated term that I think we just need to sell out and get out while we can. So the other one I wanted to mention to you, though, is GE. Net is getting a nice bid today. It had some good news yesterday as far as some of its oil pipeline services and all that kind of stuff, and some of y'all might not even know that they had a hand in that, but they do. So if we're taking a look here at General Electric on the daily chart, let me zoom this out to a 1 year. We kind of started talking about buying down here into this 15 area because it had pretty much been halved this year. So I think you still buy this one. I think you kind of hang with it. You put your stop loss underneath the market down here at say like 14 bucks. But in the meantime, I think that the shares will continue to rally to the upside. I'm positioned with in the money calls for let's see, June expiration. I bought the 10 strike call, and so far that's at about 4%. So that's an in the money call, meaning it will move pretty much in tandem with the stock. So if the stock jumps 3% like it has today, then that call should jump about the same amount. So that's kind of what we're looking at in terms of GE. So I just want to give you all a little update. I think you stay with GE right now. Another one that we kind of had talked about a little bit, let me find it over here so I can get it pulled up for you. Snap, it's another one that kind of worked against us last night. I actually bought into it. I thought it was going to continue to the upside after this little pullback the other day, so I jumped back in and bought some weekly calls as we tested this support level right through here at the 18.5 handle. As you see here, it actually initially found some support there and it jumped higher, but then it kind of gave away, and then this morning it's flat out gave away, and now we're down a couple bucks. So I think that Snap is another one that you just have to kind of cut it loose and let it go. We're down 7% this morning, so it's going to take a huge bounce to the upside to make that position recover by tomorrow. So I just do not think that happens. So I think you just go ahead and get out of there while you can. Another one that we'll talk about real quick. Fossil, staying with it. It's still moving to the downside, so I think you just hang on to this short position. It's starting to act like it wants to do a little bounce, but it's so weak in terms of the volume down here. As you can see, there's very few green bars. The sellers have just pretty much gotten control of this one, and I think that after that we had this little short covering rally is what I think it happened. I think you're going to have more shorts coming back into play because it's still overvalued. They'll really start to lean into this thing if it can start breaking out some of these lows here at say 13.5. I think that opens the door back down to 10. So that's what we're looking for. We're actually we're long a 15-10 put spread, so it means I bought the 15 and sold the 10s against it. So my maximum profit comes at 10 bucks or 10.01 actually. So that's what I think that will happen with Fossil. Some other ones that we had kind of mentioned was Procter & Gamble, and that got beat up a little bit yesterday. It's bouncing back pretty strongly today. It sold off yesterday pretty much as the markets rolled over. This is the open yesterday, and it pretty much just trickled lower all day long. But this morning it's got a good bid coming in. It's starting to move higher. We've got our moving averages crossed back over. We're waiting to take out this next swing high up here, about 81.60 or so. and it looks like it's on track to do that today. Now I just don't know if it has enough momentum to take it up there today, but we shall see. So Procter & Gamble, though, I think from a longer term perspective, you stay with it. We didn't violate any major support or any stop loss levels yesterday with that decline. As you well are aware of, that we had talked about using this low right here for our stop loss. And actually we even talked about going a little bit lower with it, just because we could see over here that this stop loss, or I'm sorry, that this 79 area was pretty close to this support zone. And then also we were talking about a retracement level there, and I guess my lines got disappeared. So anyway, there was a retracement level that came into play right here, and it was actually at the 76 level. So it's kind of one of those, do you jump out at 79 and buy back at 76? I mean, that's kind of a personal choice. Me personally, since it's long term, I would just probably own it and just let it go on down to 76 if that's what it feels compelled to do before I bought more. So I think that anyways, in any event, you stay with shares of PG for a long term play on a good company that's well run. Another one, and I'll just kind of briefly hit this one, is it's kind of a short-term trade, was Qualcomm. We bought it the other day. It actually worked back in our favor pretty much immediately that day and rallied back. And I'll pull up here so this day right here, whenever it jumped lower, and then it just pretty much rallied back throughout the day. That is, that was kind of what we expected there, and so we bought down here at the lows. It rallied back, and it's actually doing pretty good now. Since we're using calls and options to do this, the pricing is a little bit different than what it suggests anyway. So right now that position is sitting on a slight loss, but it's not major or anything. So I think that it's the fact that we bought April 20th, and so we've got about a couple months here anyways to let this play out. I think you just stay with Qualcomm right now. So I think it'll continue higher. And even in the face of broader market weakness, this thing is relatively cheap. If you look here at a PE basis, and that's not accurate because it lost a little bit of money there because of the tax stuff, but the PE is pretty much trading in a little bit of a discount to the market multiple, and I'll pull it up here a little bit later for this afternoon's video. But I think that Qualcomm is cheap enough here, and with some of the takeover buyout stories circulating, you want to be long this one, because if they do get bought out, it'll be more than $63 a share, I assure you. So I don't know why investors in Qualcomm would be willing to settle for $65 when they were just at 80 not too long ago. So I think you buy this one and you own it as a long-term play, and also as a potential for a buyout. Okay guys, I'm going to go ahead and wrap up here now. We're about 12 and a half minutes, 13 minutes of the video, so I just want to go ahead and wrap up and let y'all get your trades set up and stuff. Like I say, I think you're shorting into this market here, and I think that you're given a great opportunity right now to be selling into this thing. And so, like I say, we have a lot of resistance here overhead and pretty much right on top of us right now. So we're right now touching that 50-day moving average. Like I said, I just think you just lean into this thing and let's sell it and start expecting it to go lower. All right, guys, y'all take care. I'll talk to you in a little bit.